Welcome aboard. Good to see everybody. Please let me know if you can hear everything and see everything and everything is working okay. And we got some people online here. So hello to those of you that are joining us live, wherever you are out there. And for those of you that are watching this on replay, welcome aboard. Always looking for topics that we can do here on our trade school. All right. Looking to make sure everything is okay here. Little glitches here from time to time, but we can work through it. So today in trade school, what I want to walk through here today is journaling for improvement. Journaling for improvement. So this was one of the requested topics that we had. And I get this one from time to time. And it's something that I do quite a bit of in my own life, in my own trading. All right. Want to make sure somebody's out there. Anybody watching this? Do we have anybody live out there? If so, please chat into the room. Make sure that you can see this. I want to make sure that we're working here today and not just talking into an empty bubble. How are we doing out there? Okay, odd. I'm going to hold on one second. I'm going to jump over to the Discord room and make sure that everything is okay. Okay. So hopefully, oh, there we go. Okay, thanks, Darrow. All right, looks like we're good to go. So before you start to journal, so the whole idea of journaling is to put down and transcribe the results of your trades and then learn from that, right? So that's the whole point of it. Otherwise, why add the burden, the administrative burden of what's going on, right? So, okay. So it looks like some people are receiving it, some people aren't. So hopefully we can get this thing recorded, and then at the very least we will have an archive of this. So the whole point is you have to ask yourself why you're doing this. So let's back up for a second. What is your business plan? So if you're going to do something like this, if you're going to get trading activity out there, what I want to make sure is that you guys have a business plan, that there's a reason for you trading to begin with, right? So let's assume that you have put that into place. You have a business plan in place. You know why you're trading, what you want to accomplish from it. What is your trading plan? So trading plan is one step down from the business plan. It's more in the weeds. It's more involved with details. It's less strategic. It's much more tactical about what you're doing. This is more instructions for how to keep that dinosaur brain of yours in check as you go through the trading day. So you have to be able to precisely define your entries, management, and exits prior to taking any trades. So for those of you that have kind of taken the challenge and have read through the Mark Douglas book, Trading in the Zone, what you'll see is that at the very end of the book, he gives an exercise. He calls it the casino exercise. And by the way, I apologize, guys. It looks like my camera's backwards again. We're back to backwards. So you'll have to read the Ready Set Crypto behind me backwards. I don't know why the camera won't mirror today. Makes no sense. Got it flipped around last week. Now it won't mirror again. So there it is. If you went through the casino exercise, or if you read it at the end of the book, what you'll see is that Mark Douglas will say, all right, we're going to assume that we're going to lose 20 straight trades. You're going to write that check for that capital and say goodbye to it. You're going to assume that, do the old Viking funeral to it. You're going to set that thing on fire, push it off the shore, and let it burn and sink into the swamp, right? Because that's what you have to do. And this is what we end up doing in the middle of a trade to sabotage ourselves because we don't want to lose. And so we start to manage the trade. And this is what happens when we take small profits on trades and we let losers grow bigger and bigger and bigger. This is what's known as eating like a bird and crapping like an elephant. This is what we do. So that's one of the worst problems that we have as retail traders, is that we tend to do this. We're looking for the little wins, and we'll take those little wins, and then the losses tend to expand. So what Douglas wants to do with that is he wants you to sort of let go. Let go. You're going to take 20 trades. You might win one, you might lose some, but you have to be able to you have to be willing to say, look, I'm willing to lose all of them. But what he'll do is part of that, and I'm not going to spend all day going over the casino exercise. You can read up on that on your own. But what he will do is you cannot play this game until you precisely define how you will enter the trade and how you will exit the trade. There's no ambiguity allowed for this. And it's that sense of, it's in that spirit that I want you to attack getting a trading plan together. So you have to be able to precisely define your entries, your management, and exits prior to taking any trades. All right, well, good. I'm glad we got some people on live here. We actually have quite a few on live. This is good. Good. All right, let's have a party. So what I want to do with you guys is I want to create a trading plan with you. I don't have one in mind. If you don't provide me any guidance, or if it starts to get too complicated, then I'll fall back to something that I could use. But let's create a trading plan. Yeah, if you've never heard it, I'm full of phrases like that. If you've never heard that one before. One of my favorites is don't boil the ocean. Don't boil the ocean. A lot of us make things so complicated that we can't, we're trying to boil the ocean. We're trying to put so much energy into something that it's impossible to ever get a result from it. So let's get into our trading plan entry criteria. So we'll get into entries, management of the trade, and then we'll talk about exits last. So I want to hear from you guys, those of you that have taken the time to take time out of your day. What triggers your trade entry? So let's go over the types of things, the types of conditions that might trigger a trade entry. We're going to talk about how much capital we shall use for that trade. And as you know, rule number 1 of risk management is to define what the profitable and loss exits are for the trade. We have to define that before we even enter it. Okay. And then we'll get into management criteria. So are we going to do anything while we're still in the trade? So are we going to move up a stop while we're in the trade? Are we going to play any risk management, things like that? Are we going to define how we would take early profits or partial profits? And then, of course, the exit criteria at the very end. So what will you do to close out the trade? So obviously, for most trades, the ideal would be set up a limit order, hits the limit order overnight while you're sleeping. Hallelujah. There's that. Any discretion? Do we have any discretion involved in the trade? So in other words, is there like a time stop? If we're in this for too long, do we close it down? Okay. So what we need to do is I'm going to go back through this and actually get out of, let's see, I will get out of presentation mode and we'll go into editing mode. We're going to edit this live. We'll do it live. There we go. Okay. So I'm just going to type in here and I'm looking for folks. Let's see. Do you use a sell ladder immediately after you buy? Use fib levels. Well, something like that would be more attuned to, let's do something where we're doing a swing trade. So a swing trade is going to be something where perhaps we're going to be in the trade maybe for a day, maybe 5 days, something like that. We could get into day trading. We could get into scalping. We could get into things like that if you wanted to. That's where this type of technique will really earn its keep. But let's keep things simple for right now because we've got people from all ends of the spectrum. We've got the hodlers out there that just want to enter positions on a fundamental basis, and we've got the scalpers out there on the other end of the spectrum. So let's find something in the middle that we can all use. Okay, so what would you like me to use? And if you guys don't provide any guidance, again, I will just throw something down here simple that we could, we'll map it out on a chart and we'll show some potential entries and what they look like. And then what I will do is once we define this entry plan, I will go over to the tracking sheet and we will map these rules out to the tracking sheet so you can see how we would score something like this. All right, does that make sense? All right, I'll get started. And if you guys want to add something in here, let's see, moving average. Terrence Gardland, how about a 55 EMA crossing the 100 EMA? Don't boil the ocean. Let's not put an offset in there. Okay. So we're just going to do a 55 and 100 EMA crossing average. All right. So very good. So we're going to add 55 and 100. Okay. Trade direction must be in the trade. Well, I should say trade must be in the direction of the 55, 100 EMA cross. Okay. Trade must be in the direction of the 55, 100. Now, for those of you that don't know what we're talking about here, let's say that this is the 100-day moving average. This is the 55 moving average. So if it crosses down, if the faster one crosses down over here, this would be a short entry, or this is where we would start looking for the short entries. Or similarly, if it did something like this, then we would look for a long. All right. All right. Ryan, yeah, ATR might be good for a condition. Let's just go with something really simple here. Let's put some simple signals together. How about if we say, all right, how about if we say something like this, trade, long trade must have 12, 26, okay, sorry about that. I must have hit a button here. Okay, audio should be back. There must be somebody like over my shoulder, like typing buttons here or something like that. I don't know what's going on. So anyway, back to the rules. First rule is trade must be in the direction of the 55, 100 EMA cross. We are not building a production strategy. We're just putting one down for fun here, right? Long trade must have the MACD histogram has got to be positive or negative for a short entry. So it should be good on audio. Let me know if there's no audio, but I think we should be good. All right. Yep, we got audio back. Okay. I wasn't saying anything all that interesting anyway. All right. And then lastly, just for the trade trigger, let's just say that we have slow stochastic trigger. All right. So how do we put all this together? Let's go out to a price chart. I'm going to go out to just a template here. I'm just going to go back to price and volume. There we go. And let's add some indicators here. Let's do, let's see. We want to do exponential. Oh, there's a double EMA. That'll work. All right, and this one's kind of This one's kind of funky. So we have to go in here to the format. All right. Well, that doesn't make any sense. Why would it be a double EMA and only have one? I don't get that. All right. Let's go back in here. Let's add exponential moving average, and we'll just add 2 of them. Yeah, I don't know what. I wonder if it's under, yeah, moving average, exponential. There we go. All right, we're going to get rid of that one. We'll add 2 of these in here. All right, so what I'm going to do is I'm going to come over here and format this one. This one is going to be 55. And we're going to add some style to this one. There we go. We're going to add some big style. And let's make this one, I like to make the shorter one like red. So we're going to make that shorter one red. And then let's go ahead and add another indicator in here. Exponential, let's see, moving average exponential. There we go. There's another one. We've got another one in here. Let's format this dude and let's make him big and green. Okay. And let's change that to 100. So there we go. We have a long cross on Genesis Vision. How about that? So there's our moving averages. Oh, looks like we have lost. Shoot, we have lost. There we go again. I must be hitting buttons. That must be the problem here, is I'm hitting buttons without thinking about it. Okay, so we've got our moving averages on here. Let's go ahead and add the MACD histogram. Let's keep my fingers off of the keyboard, and maybe we won't have issues with that. Let's see, MACD histogram. I know there was a histogram on here. Well, we'll just add the MACD, and we'll just get rid of the lines. How about that? So there's the MACD. And we've got ourselves a histogram there. And you know what? I'm going to remove these. Oh, no, that doesn't work. Let's try this again. Let's see with the MACD. Sorry guys, I'm tap dancing live here. Bear with me. Okay, so there's our MACD, and then I'll just leave that alone. I just don't like the 2 lines on there. I usually just get rid of them. And then I will add a slow stochastic. This is not a strategy that I will ever use. This is just something that we're having a little bit of fun with to build. All right, so this is your basic default stochastic. Oh, and I don't like that one. I'm going to get rid of this one, and I'm going to go hunting around for something else. Because I want something around a 0 line. For some reason, that one's not around a 0 line. Yeah, vision again. There we go. So we could use relative strength index. Let's just do the RSI. So I'm going to change our strategy. We're going to have an RSI trigger. Long is less than 30. Short has to be above 70. So we're just going to use the RSI trigger for this guy. Okay. So problem with this, this is kind of a lousy indicator because a lot of times you're just not going to get it. Now let's not use this one. Sorry to be spastic here, but let's get a better, I want to use a different oscillator than this. Let's use the awesome oscillator. This is a Bill Williams one. So we're going to look for a hookup. We're going to look for something where we have a transition into green. Okay. So it doesn't really matter how we use this. Oh no. Are you kidding me? I did not hit that. I don't know how that's happening. All right. I think I have something funny going on here with the touchpad. Okay, so let's go over to something where we can look at this. Let's maybe like a Bitcoin or something like that. So we can see that what's going on today. Not much. Not much is going on with Bitcoin today. So anyway, what we want to do is now transfer this strategy. So let's walk through the strategy again. Don't touch the keyboard. Don't touch the keyboard. All right, so what we're going to look for is, remember the two lines here we have. This is what happens when you start to throw a lot of indicators on here, is that it squashes the price up, right? So it squashes the price up. Let's squeeze this in so we can get more signals on here. And we can maybe look for something where the price was actually working to our advantage, right? A little bit tough these days. We just don't have much movement. Okay, so here's a good example back in November where we had a nice dip back here. We had a nice dip and we actually had the MACD go negative shortly, and then it started trading positive, and here comes the oscillator going positive again. All right, so let's go over here. Now we can start to map these into, okay, we're still good. We're still good. So what I have here is a tracking sheet. We have a date, we have a setup. You can use different setups depending on if you have different entries. A lot of times you may have more than one setup. We don't this time. There's the time. You're either going to be going long or short. Here's entry rule number 1. And so for entry rule number 1, we're going to use 55, 100 EMA. Okay, so that's an entry rule saying that for us to enter long, the 55 has got to be above the 100. Now, I didn't do that. I didn't do that. I don't know what's going on here. I'm going to hide this thing, and I don't know why we keep losing our screen. I'm just, I'm puzzled by this. So something funny is going on here. I think Mav is like hitting screens here. Okay. Let's go back to this. So this is our 55-100 EMA. That's our 55-100 EMA rule. All right. Do you guys understand that? So for each trade, I am puzzled here by the screen is seemingly of its own mind. I apologize for this, guys. I don't know why it's doing this. We have gremlins here today. I will keep an eye on this thing, though. If I see the screen moving around, I will keep an eye on it. All right. Again, our first rule is the 55-100 EMA. The price has got to be, the 55 has got to be over the 100 for us to take a long. The 55 has got to be below the 100 to take a short. Now, what happens is if we violate that rule, if we take a trade entry where we do something that we don't mean to, right? So we chase after something. Did it again. Oh, I see what's going on. I know what's going on. All right. The problem here is that I can't enter numbers. I can't enter numbers into this. No wonder. Okay. I get it. So what? I have a hotkey set for the, so I can't enter anything into here. I can't enter a number 1 or a number 2 or anything like that. I see what the problem is. Okay, we've got that taken care of. All right, so I just can't enter anything that's got a 1, 2, or a 3 in it, because those are my hotkeys to switch the screens. So now we've got that taken care of. Okay, so our first rule. Now, if I violate this rule, what I'm going to do is I'm going to put a 1 here, and I'm not going to put a 1 because Maybe you haven't done any spreadsheet work or anything like that. But this is what we want to do. We want to track the errors. If we goof, we want to flag that. We want to stick a 1 in there. I'm not going to do it. Want to stick a 1 in there, and that will flag that field. It will say we made an error in there. Okay, so what is entry rule number 2? What is entry rule number 2? Entry rule number 2 is our MACD. All right, our MACD histogram. So for us to take a long, the MACD histogram has to be positive. For us to take a short, the MACD histogram has to be negative. Okay, again, we are going to flag that. We're going to hit a number 1 in there if we goof on the trade. And I know a lot of you are asking, like, why would you goof on a trade? Well, it can happen. And it can happen because if you see something running away, you say to yourself, well, just this one time, I'm going to enter a trade and it doesn't have all of my rules there. And this is what you need to do. You need to see whether or not you violating actually ends up making, lost wages for you, or whether that's reinforced behavior. This is how you learn. What do we have for entry rule number 3? Okay, so we're going to say the awesome oscillator has to be trending in the direction of which we want it to be, right? Yeah, don't worry about it. I can always share this with you guys. And I thought this was on, yeah, I've got this on a different account. So once I get it to the right account, I will share it with you guys. Well, Duro, most of what I use for crypto is the fractals. And it's going to be just a little bit more difficult to do that in this type of, so not everybody has taken the fractals course, so I don't want to necessarily do things based on the price and start talking about different time frames, have enough energy and those kind of things. I mean, we could go over here and say, 5x energy, question mark. Does your anchor chart have enough energy, or is it in exhaustion? We could say, does the 1x, oops, oh, I did it again. Don't do that. So I could say signal chart energy, right? Does the signal chart have enough energy in it? Look at that. I always want to hit the 1. All right. So again, the whole point here is typically what I will do is these are going to be like your entry rules. Entry, filtering rules, anything like that, that either signifies that you should enter or that you should not enter, right? So all of these have to be green. And what you're going to find is that you will violate that from time to time. Oops, I forgot to check this one. Oh, I can't believe I did that. Because I was chasing after a coin and I didn't check the moving averages. Now, the other thing that we'll do here is, depending on, let's see, we're going to insert one to the left. Let's insert a couple of them here. A couple of columns. And oh, that looks ugly. I apologize for that, but it is what it is. So we can just change these over to green. Like so. Just use a different fill color. And these might be management rule. Okay, these are management rules. This is what you would track for once the trade is in place. What are you going to do? So remember, again, guys, what you need to do is you need to set up however many entry rules that you have. If you find that you have more than, I would say, 5 to 6 entry rules, you will tangle yourself up into a pretzel, especially if you're doing shorter time frame trading. What most people do is that they add way too many rules, just as like what I talk about with you guys with indicators. Most people add way too many indicators, way too many rules, waiting for everything to be lined up perfectly, and it just never shows up. And so what you end up doing is you start violating these rules because you're getting sick and tired of waiting. Right? Well, just this one time I'm going to enter this trade without that one rule. I'm going to see if it, So what your goal as a trader is going to be always to find the simplest form of finding edge that requires the least amount of administrative burden to you to track, to be able to, right? If you're flying an airplane, and I've done this before, when I was in pilot training last year, and you get to the point where you get information overload. There's just too much going on, especially as you're landing or taking off. There's just way too many things going on, and you tend to get tunnel vision on something, and you block out everything else. And so the longer that you do things, the more that you're able to sort of subconsciously process input very quickly. But at the beginning, what you'll find is that you get information overload. And so again, that's my call to you guys, to keep things as simple as possible. Like, think about this. If you did a fixed risk position with crypto, what would you really have to do? I mean, pretty much the only thing you would have to do, you've already set your risk on the trade, so you don't have to worry about a stop. You don't have to worry about blowing out of the trade. Now, you can goof by setting it for too large a position, but let's hope that you don't do that. But you don't have much in the way of management rules. So what you could do is maybe you can say, well, the trade got almost up to my profit target, and it's fading back down and it's not looking good. So maybe what I want to do is I can give myself discretion to just close the trade off if it gets within X% of my profitable exit. If it's still a profit, if it got close, but I'm not willing to hold it any longer, perhaps you can give yourself discretion in one of these rules to do so, right? So the most I've ever done on a tracking sheet like this has typically been something like 5 to 6 entry rules and maybe 4 management rules. 4 management rules. And a lot of the management rules, we're under attack. That sounds like a Huey. Yeah, so it's a helicopter. So I would say 5 to 6 entry rules, at the most 4 management rules. So the management rules come into place like if you're doing shorter term, like if we ever get into day trading and scalps and stuff like that. Yeah, we're going to need some basic management rules because you're moving stops around. You're looking at targets. You've got multiple contracts. You're peeling off things like ladders, like what was talked about. Yeah, hemisphere, if we wanted to, we could use Bollinger Bands for entries. So there's all kinds of different ways. It doesn't, let's not get hung up on the actual strategy that we pick. What I'm trying to do for you guys is to show you how you track and how you identify. So let's take it to the next step. Let's just assume that we did 10 trades over here. We did 10 trades and we got a certain amount of information from this. So let's say that we got, and I know that I can't do this, I can't type in the numbers here. But let's say that we had, ones here and here. We goofed up our awesome oscillator and we had problems here, 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 and here, right? And so maybe we only had 2 over here, maybe 3 on this one. No problems with the MACD histogram. Okay, so we get done with taking 10 trades. So what do we do? Remember, one of the things that you guys need to make a transition on as you get into actual trading, and this is not necessarily for those of you that are investors, but out of the gate, you will look at your performance, your monetary performance, as a judge of how well you're doing. You'll say, hey, this week I was up $1,000. I'm awesome. I rock. Okay, how many rules did you break to make that $1,000? Because what will happen is if you get into a habit of breaking rules, oh, by the way, speaking of habits, and I know this is going to be backwards, but I just got my copy of Atomic Habits in from James Clear. It is awesome. This guy is the real deal. He was just on CBS. If you go on to YouTube and type in James Clear CBS, you'll see his interview from this week. And I believe he was interviewed Tuesday morning on CBS. And he's just a great guy. And that's the type of person that can teach you the right habits to be an effective trader. That's why I've kind of gravitated towards this guy. He lives like 5 miles away from me. And I want to do work with this guy because I think he's got a lot to offer to the trading community, the crypto and trading community, building habits, becoming better at what you do, because a lot of us, we sort of dive into something and we give it our all and we end up doing things based on intuition. And intuition is not going to keep you surviving as a trader. Building good habits and becoming sort of automatic about what you do, that's where you get into consistent performance as a trader. So I'm going to do everything I can to pull things out of his material, just like most of the stuff that you're seeing me bring up today. And again, I know I apologize, this is backwards, but this is Brett Steenbarger. Brett Steenbarger. And I know this is backwards, but maybe you can look at this and decipher that name. Enhancing Trader Performance. Just about everything I'm talking about here today is in that book, which I read umpteen years ago, and shows you how to like peel back the onion on what you're doing. Okay, so let's get back to the sheet here. So if we add all these up, what we're going to find is this column had 2, this column had 3, and this column had 5 to it. Okay, so over the course of 10 trades, we ultimately ended up making 10 errors. So what most people will do is they'll say, well, 10 errors, let's just fix them all at once. Oh, wrong. It's not what you do. What I'd like to do is I'd like to see, for people to see how this correlates. How does the error correlate to a win or loss to them? Number one, just so you can see the impact of it. But secondly, based on Pareto analysis, Wilfredo Pareto is the guy that came up with the 80-20 rule. And so, excuse me, if we set up a histogram based on these, what we'd find is that, this is the 5, here's the 3, here's the 2. Well, pretty much we should work on this one first. Why don't we just get rid of this one here? We've got a problem. We've got a systemic problem in our trading in misinterpreting this signal chart energy. We're not doing it right. It's not at the level that we should be trading at. So perhaps we're taking a breakout and the trade's at exhaustion. So we're FOMOing, we're chasing after something that's got no energy left. We get into it and right down again it goes. Okay, that's a big problem. And we got to cut that out because that's going to cost us money. Because if there's no energy for something to break out, it will come back down again. Just like a booster rocket. Right? So we've got to do everything that we can to figure out, all right, what am I doing? What is the brain doing to trick me into chasing after a trade like that? And I've got to get rid of that one. Notice that I really don't care about this or about this. I don't care about those. Their day will come. Their day will come when I get rid of all of this, when I get rid of here, this number 5. Don't type the letter 1 again. Don't type the number 1. Okay, when I get rid of this, then and only then can I start to focus on my now biggest problem. So this is what Pareto analysis is all about. This is how you systematically attack your number 1 root issue that's causing trading problems. Okay. Let's see, Dero, do you do few sheets depending on the strategy that you adopt? Oh yeah. Yeah. So in a perfect world, now what I've gotten to do with some of my trades that I do on different markets or different strategies like options, it's so simple that I really don't need to track anything because it's, you know, I've been doing the same thing now for 15 years and I don't need to track, I don't need to optimize it anymore. It just happens. But what you find is that you must do this sort of stuff where you deal with human performance issues, and that's always going to be the shorter time frame stuff. So anything intraday, you've got to do this. This is pretty much the only time that I use it now. I don't worry so much about swing trades, especially if it's fixed risk, because there's so much time. I don't make errors anymore with swing trades. It's always the intraday stuff where it's like, oh crap, I forgot. Oh yeah, I missed that one. I mean, everybody's going to miss stuff intraday. Okay. So anyway, let's go back to where we started. We started off with a strategy, right? So let's go back to this guy. We started off with entry criteria. Okay. And then we talked about trading plan management criteria. So once we're in a trade, management criteria deserves a column or 2 or 3 in that spreadsheet. Exit criteria deserves a column in that spreadsheet. Remember, if you're taking profits early on something like, well, I just wanted to take profits early, right? If it's not according to plan, if you don't give yourself discretion, you've got to mark yourself off on that one. So this is where you get to grade yourself with a red pen. Okay, so we map those to a tracking sheet, and then once we got to a tracking sheet, and it's all gone. Everything's gone. Once we get it to a tracking sheet, the whole purpose of this is to teach yourself what you're doing. So now one thing I will do is, some of you may say, what on earth is this stuff over to the right-hand side? Well, I will track wins, because a win, if I say, and I can't use the number 1 here, which is making this really difficult. I'm going to have to remap these keys to like 8, 9, and 0 or something like that. Okay, but yeah, and the 9 is the mute button. So if I hit 9, I mute myself. So a remapping is in order here. But what I will do is, and this will come into play if you guys get into Digitex Futures. This is where we will start to use things like this, like maximum adverse excursion. Isn't that cool? Maximum adverse excursion. Oh, trust me, if an A, B, and a C, trust me, as soon as I remap them, I'll start typing in stuff and then we'll be all over the map. I apologize for watching you guys suffer through all that while I figured out the problem, but that's what trading is all about. It's finding the root issue and solving it and getting by. Okay, so maximum adverse excursion. So I'll have a trade where something like this, where maybe I'll have like, 5 ticks against me. And then I'll maybe have 8 for me. And so that's going to form some kind of a ratio, and it's going to be over 1.0. So I'll track stuff like that. Like, how good was my entry? If I'm looking for something like this, like if I spot an uptrend and if I get into something and if I think that it's turning, right? And I'll enter, if I'll enter right there at that spot. So let's use this. Let's use red here. So I enter at the red, and then what happens is maybe it pulls down just a little bit further and then goes in my direction. So I'm going to have some adverse excursion down here, and I will have favorable excursion up here. That's what this is, maximum favorable excursion. And so this allows you, whenever you do trades like this, when you're doing serious scalping directional trades, this is where you're going to get into these types of ratios, like how good are my entries? And if you have a lot of entries where it's like you got a lot of adverse and not much favorable, you're doing something wrong. And you need to be able to spot the root issue as to what you're doing. Again, I'm just sort of foreshadowing some of the things that we'll get into probably next year. So we'll probably get into some of those types of trades next year. I would like to see if I can bring some education on BitMEX here in the short term. I don't know how long that's going to take me to put together. Okay, so with that, Does everybody understand what we're doing here? Again, the whole point of today's exercise was not to, not for us to argue over what indicators we should be using or not, but how do you set up a trading plan, and then how do you map that trading plan over to a journaling sheet? So a journaling sheet this is the quant part of things. This is the quant part of my numbers. Ultimately, what I'd like to be able to do is I tabulate gross wins, gross loss. I get a profit factor and a win rate. These are what I mostly look at the end of the week. Like, how did I do? Do I have a money making business, or is this a money losing business? If it's a money losing business, the answers that I seek should be in the scores down here. I should be able to see exactly what I have or have not been doing correctly and see whether or not that actually makes an impact. Maybe I'll have a bunch of errors, but it actually makes no impact whatsoever. There's no correlation or causation in this case to negative results. So I don't want to focus too much on that. So I will look back and forth at these things. But that's the whole point behind it. It's a feedback tool. It's a feedback tool. I mean, look at what they do with sports these days. Everybody knows everybody's batting average and on-base percentage and slugging percentage and number of walks and number of home runs. And, if you're going to be an effective trader, if you're actively going to be trading at things, you need to have those same types of statistics for yourself. So the more short term that you do this, the more professional and effective that you have to be. If you're just a hodling investor, most of this will not apply to you. The management rules are not clear to you. Okay, so let's say that we do something like this. Let me illustrate through, bring it up in a chart. So let's say that we take an entry here. And again, this is all, Dero, this is all dependent upon your strategy, right? So if we say, okay, here is an entry we enter on 16 November as the awesome oscillator goes green, we have the MACD going positive, and we have the 55 above the 100 EMA. So we end up going long here at 78.29. Okay, so maybe my rule for profit taking is maybe I'm going to say, I'm going to define that ahead of time and say that I'm going to look for, maybe we're going to look for 100% return on this. Okay. So the price comes up here, and let's say we enter at something like 7,500. Let's just say 7,500. Okay. Just to make things easy. And the price gets up to almost 8,500, and you can start to see this, and I wish I could get this thing off of here. I can't get rid of that little note, all right? And I don't know why. All right, so there it is. Let's say that we see the price coming up to 8,500 and it starts to fade back down, and you get scared. You say, I've got a profit, but I don't want to give it all back. And we do this, don't we? We do this. So you've got a clear rule that says that you want to double the position. You enter at 7,500 and you're going to look to 15,000. I know that's unrealistic. Somebody was asking in the Discord room about, how do you set up targets? That's not realistic. Maybe 100% might be realistic if you're doing intraday, but this is not a realistic target, right? So eventually, through your experience, you would probably go back and revisit that rule. But I'm just doing an example here today to show you what a management rule would be like. So maybe you think Bitcoin's going to the moon, so you want 100% return on that. You've got a limit order in there to sell out at 15,000, but it starts going up to 8,500. You're booking gains. You're posting stuff on social media that you're a rock star. Things are going to the moon. And then it starts to pull down. And you see your first big red candle and you're like, oh, and you sell out of it, right? That's a management rule. You broke your management rule. You told yourself that it was a fixed risk position, so you had your risk set. but somebody dangled a carrot in front of you with partial profits and you couldn't resist it and you took it because you're playing not to lose instead of playing to win. That's a management rule that you would want to track in this dude over here. Whatever that management rule is, right? So I asked before if you gave yourself discretion for profits, and giving yourself discretion for profits, maybe you're going to look at this and say later on, you're like, oh my God, look at this. I gave up on all of these profits. Look at this. I gave up on all this. I could have had my target profit at 15,000, but I got scared at 8,000. I got scared out of the position. And it happens. It will happen to you. It will happen to you, right? So if you do this on a day-to-day basis, then you get lots of feedback on things like this. Here, you don't get much of a chance to redo that, right? So that's what a management rule is. Management is once the trade is in place, how are you going to manage the position? How are you going to manage you? That's what it gets down to. Okay, any other questions for this today? So I think we've kind of covered the point that I wanted to make. I think we've kind of covered that, but I'm not sure if we've landed yet today, right? Does this make sense to you? Do you guys understand what we're trying to accomplish here? Okay, I'm reading back through the comments to see if I've missed anything. A lot of comments about me, either no sound or no video. So for those of you that are watching this on the replay, my apologies for all the disconnects here. Okay, looks like we're good. Okay, so anyway, guys, let me know if there's anything else that you'd like to see me do. I know that there's been a number of questions about this topic, and it's something that's very near and dear to my heart, that I didn't really start to make a difference in my trading. It was very much, I'd have great weeks and I'd have lousy weeks, and I couldn't really put it all together until I read Steenbarger's book and started using his techniques. I mean, think about what this guy does. This guy works in Chicago for a professional trading firm. They've got, 50 traders. And that's all they do is they come into an office and they trade huge accounts with huge positions all day long. Imagine doing something like that. And of course, each trader is going to have some level of performance. Either they're going to be going this way or they're going to be going this way. And it's his job is to identify and manage and coach each of these traders and make sure that if it's going this way, that they can turn it around and make it go that way again. It's a hugely important job. And so what he's done is all the stuff that he's learned over the years is he's kind of condensed it. He's got a number of very, very good books. He's also got Twitter account. He's got a blog. He's got, find this guy. He's awesome, awesome, awesome free information out there. It will make you a better trader. Quick comparison to the fractal energy chart. See, again, let's not get lost in the weeds here. We don't really care about, we're not comparing strategies here. That was not my intent, is for us to get lost in the weeds on comparing the awesome oscillator versus the fractal energy. I just wanted to, I know that a lot of you are just learning fractal for the first time, and some of you did not take the class, and so you don't know what I'm talking about with this. So I just thought I'd go back to more of a simple, typically what most people learn on is that, you're instantly shoved moving averages down your throat. You're instantly shoved a MACD, and you're instantly shoved an oscillator down your throat, and to say, okay, pretend that the market still operates the same way it did as in 1975 and go ahead and use these tools. And, you can find typically on a nice quiet uptrend, you can typically find some pretty good signals on these. I'm not saying it's useless, but I don't think that it really gets you in tune with the way that markets operate, which is what the whole point of fractal energy trading is. So again, that's just my opinion. Opinion is the operative word there. Okay, guys. thanks everybody for hanging out with me today. And that is it for Trade School. I will look forward to any other topics that you guys want me to discuss and bring up in the room. But otherwise, you guys have a great Thursday, and I'll see you tomorrow.
There goes a sight from my soul. There goes a sight, there goes a sight. Now there goes a sight from my soul. There goes a sight from my soul. There goes a sight, there goes a sight. There goes a sight from my soul. I think the angels just walk by.